Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. So this morning in the morning call, I talked about expectation that things are going to be somewhat quiet today, and they have been somewhat quiet, but we're seeing a continuation of the bullish price action that we've seen over the last several days, which I think will please the bulls that are finally have been seeking commitment to the upside, and we haven't really been getting much of it, despite the fact that the S&P has been holding up near highs, but to have 3 straight days, for a lot of stocks, 4 straight days of upside price action, commitment to the upside. It's a definitely much better environment that we've had over the last several weeks, and I think the frustration level in recent days has subsided slightly, but we're going to need some more powerful moves for people to really get excited by this environment again, and I'm not sure that the market really feels like it wants to blast off to highs, but that doesn't mean that it can't. It's just the feeling that I get right now, the feeling that a lot of traders have right now is that there's just not a lot of enthusiasm to buy highs, but there's also not sort of the urgency to short lows either, because you're seeing, bonds are holding up. There's just a lot of eerie quietness on the fixed income front, and that's leading people to sort of stand pat and wait for the first shot to be fired, I guess, and that just hasn't really happened. Every major pull-in has gotten bought, even though we have seen some more significant damage, obviously, in the Russell and in certain areas of the NASDAQ. But let's take a look at the indices. And I'll show you a heat map also from FinViz, which is a resource that I use that I think is valuable in terms of identifying where relative strength and relative weakness is during any given session. If we take a look at the S&P here, we are knocking on the door of all-time intraday highs. We're back above all-time closing highs. 1897 was that prior high that we sort of had a little breakout failure at. Now we've eclipsed that. We're up here at 1899 basically. 1902 are the intraday highs, so just a pebble throwaway, as Scott likes to say. And wouldn't be surprised, maybe with a little bit of rest next week, wouldn't be surprised to see us take that out. But volume has been low, all kinds of things. The power really hasn't been there. Not a lot of momentum here around highs, which is what you like to see to really feel bullish. But nonetheless, you have to obey the price action. Volume doesn't get you paid. Price action does. So that's always going to be our number one focus. The NASDAQ, this has been the area that's been really impressive. And looking at the index, it hasn't even quite been as strong as some of the high beta tech names that traders often focus on and that we often focus on here in the morning note, off the charts, things like that, things that have some momentum. But you can see continuing higher today in the NASDAQ, so positive there, breaking this descending channel, now well above all of its moving averages. Positive signs there. IWM also, even more potent today than some of the other ones have been today, even though it was a little weaker 2 days ago. But good to see it breaking that downtrend as well. So if we could get some extension away from that downtrend, maybe things could start to repair a little bit in the small cap arena. And just take a look at Japan. Japan had a really strong session today. Gapped up this morning, the EWJ did, as Japan had a strong session, has continued higher during the U.S. session. So right back into the 200-day moving average. We're starting to see more commitment to the upside from Japan after sort of a tough start to the year, sort of been trying to find its way out of this lower level range. Things could be changing a little bit. This pivot here will be very important. 1147 is the area on the EWJ, so just something to take note of there. And it's good to see that stocks can be strong even with bonds up today. The bonds haven't been explosive or anything like that, but the TLT gapped up, is a little bit off of its highs, but good to see both of those up in harmony and strengthened bonds not weighing too much on different areas of the stock market. But just jumping through those high beta tech names that I mentioned, Apple just grinding higher, continuing higher very slowly. Amazon, same situation. I'm going to become a broken record when I go through these tech stocks right now because they all look very similar. Google, continuing to bounce, just grinding higher. Netflix, same situation. The solars, which I talked about this morning, TAN is a solar ETF that I really like the composition of. Continuing higher also, not blockbuster the way it was 2 days ago after those TSL earnings, but this is an area, another one that's breaking a downtrend that I think could be a really good opportunity down here still, even after that move off the lows, off the 200-day. Talk about using the 200-day as a support area, acted like a trampoline sort of for the TAN ETF. And just jumping around to a couple of the names I talked about, GTAT, more explosive today, helping TAN be strong. And this is one that if you're looking for an opportunity to buy it on a dip, you got a really nice one here out of this upper level range. And I talked about the same thing with FSLR. Sometimes if you like a stock, you can't necessarily buy it on strength. You have to wait for a pullback, and you have to be decisive about jumping in. That's obviously easier said than done because you don't know how far these pull-ins are going to go. FSLR quiet the last 2 days, but another one that I think just that solar sector as a whole looks attractive to me after that pull-in, even though we have bounced a little bit. GLW, one of my favorites I talked about this morning, quiet. And what I was going to use the heat map for was usually when I do a recap, I'll jump over to FinViz. In addition to things that I'm watching during the day, I like to just get a real clear look at exactly what's going on in terms of relative strength and relative weakness. A lot of it often has to do with movement in fixed income markets and things like that. Will drive, for example, strength in utilities and weakness in growth names and things like that. But as you can see here, down below you have a scale here. So the more red that it is, the bigger the loss is. So if it's very red, it's down more than 3%. Dark red down 1.5%, bright green up 3%, sort of a dark green up 1.5%. Black is flat. And obviously you look across here, you're seeing a lot of black and a lot of very dark green. And what that means is that there's a lot of things that are flat to up very small, which I was just going through some charts, and obviously you saw that on the charts as well, with all those tech names sort of grinding higher, drifting higher with not a lot of conviction, which is not surprising going into a holiday weekend like this. But I just want to show you this FinViz tool, which I was looking for names to talk about, something exciting to give you today on a quiet Friday before a holiday weekend. But as you can see, not a whole lot of big movers today. Gilead down more than 3%, it looks like. Lennar, some of these industrial goods names, or residential. These are Lennar's a home builder. D.R. Horton as well. Best Buy, big mover, along with GameStop after it reported strong earnings. HPQ, up around 6.6%. NSM, one of those mortgage servicers, up. Just an example I wanted to show you of this FinViz. FinViz overall is an outstanding resource. If you've never used it, I would get familiar with it. It has different scans, and if you're looking for short interest and things like that, it has just about every piece of information you want to know about a stock, in addition to this heat map, which does a good job of giving you a macro type of roundup each day. Anyways, going back to the charts, not a whole lot more to talk about. I mean, I talk about the banks. They're quiet. Look at gold. Gold, something that's another one that is just mired in this mid to lower level range. Really hot start to the year for gold, pulled back and is just sort of trying to find its identity here. You could talk about a wedge pattern that's coming near an apex. And, gold obviously attracts very strong opinions on either side. It's something that the Fed is tapering QE, maybe talking about raising rates in the future. Those things would seem to be pretty bearish for gold, but given all of that, this year it's been strong, and even it hasn't broken down despite some stronger economic numbers in recent months and things like that. So technically, I think you just have to obey the technicals on gold and not have an opinion, not be a gold bug, not be a gold bear. Just look to see which way it breaks this wedge pattern, and if it gets some sort of igniting move. And I think that could definitely foreshadow the future for gold. And besides that, there's not a whole lot to look at on the charts, to be quite honest with you. I talked about this morning how you should expect a quiet market. It has been quiet, but with a little bit of a bullish lean to it. And I think people will like that. I think maybe some people had some leftover positions from earlier this week that, trim and trail type of thing. You have a small position left. And squeezing a little bit more out is always a positive thing, but I don't think anybody's really clamoring to buy new highs here or buy stocks after these 4-day moves in some of these tech names. And I think everybody will just sort of look to start fresh in June. It's a new month. After a holiday weekend, you're starting to enter summer trading, which could also lead to more of this low volume type of action. But like I said, volume doesn't pay, price action pays, and markets can move even despite lower volume. That's sort of the new normal that we've gotten used to, and I think it's probably what you should expect this summer. But this has been John Darsie, your editor-in-chief here for the Daily Recap. Everyone have a great holiday weekend, and we'll see you back here next week.